Hi traders, welcome back to another video in my AutoView series. Today's video is going to be showing you how you can create a Forex position size calculator in PineScript. So this script that we are going to create today will calculate our position size for us automatically based on the distance from our entry to our stop loss. So today's script is not about our entries. I'm simply detecting engulfing candles whenever a engulfing candle occurs at the 15 bar low. So the script is counting 15 bars to the left, and if this bar happens to be the lowest bar over the past 15 bars and it's an engulfing candle, we enter theoretically on that bar. So this is not a profitable strategy by any stretch of the imagination. I would not trade this. This is just purely for demonstration purposes. But if you look up here at these plots, see how this script is plotting these numbers here. We'll go over what these numbers are as we write out the script, but the last two numbers are the ones I want you to pay attention to right now. The gray number is our distance from the closing price of this engulfing candle to this red line, which is our stop loss, which is simply just 1 ATR below the swing low. So we're calculating the distance from our entry to the low and then adding on 1 ATR to that distance. And that gives us our stop loss distance and our stop loss price, which in this case is 91023 cents on US Swiss. So the gray number is the pip distance. The purple number here is our position size. So the purpose of today's script is for automating our position size calculation through AutoView. So by now you should be familiar with what AutoView is. If you're not, make sure to go back and watch the previous videos in this series where I explain in detail what AutoView is and what all the commands are and how it works. But you should know by now that AutoView can talk to Oanda, but Oanda cannot talk back to AutoView. So AutoView has no idea what our account balance is. We need to tell AutoView through our script settings what our account balance is, what our account currency is, and what our risk per trade percentage is. So this is how much we want to risk per trade of our account balance based on our stop loss. We give our script these three parameters, and the script automatically calculates how many units to trade on this particular setup. So in this case, based on our entry to our stop loss, which is 34.6 pips, we would trade a 26,341 unit sized position in order to risk just 1% of our 10,000 USD account on this setup you see here. Now this number is not 100% accurate, but it's pretty damn close. I think from my testing that I've done across all of the pairs that I can trade with AutoView, it's typically, depending which time frame you're using this on, within 0.003% accurate. So it's 99.997% accurate on most currency pairs. So right now I'm on my paper trading account through TradingView. If I open up my order window here and I click stop loss, if I type in this number here, 34.6, which is already in there from testing earlier, so I want a 34.6 stop loss on this particular trade, and I want to risk 1% of my account. If I type that in, notice that our units box here is extremely close to our purple number here. So TradingView is saying in order to risk 1% on a 34.6 pip stop loss trade, we need to risk 26,413 units. Our position size up here is 26,341 units. So if I quickly bring up the calculator here and we divide these numbers, 26413 divided by 26341 equals, if we minus 1 off of that, we are within 0.0027% accurate in regards to our position sizing. So now if we find a script that we like, so let's say that either you find a script on the TradingView website that is profitable and you would like to automatically trade it on the Forex markets, or you write your own script to auto trade the Forex markets, the code I'm going to show you today will enable you to be able to risk a certain amount of your account balance per trade instead of just using a fixed position size. If I highlight this number up here and hover my mouse over this setup, there's a big difference between 26,000 units of risk on a trade and let's say 47,000 units. That's double the position size. So if we were to use a fixed position size in our trading, our risk will not be consistent. On one setup, we might be risking 3% per trade or 5% per trade. And on another setup, we might be risking 0.5% per trade. That is not going to lead to consistent results. And it could, in fact, break a potentially profitable strategy. It could turn a profitable strategy into a disaster that will blow your account. By using the source code that I'm going to teach you today, we can turn AutoView from borderline useless, considering trading a fixed position size with a dynamic stop loss just simply doesn't work, to something that we can actually feasibly use to auto trade the Forex markets. I have 3 more videos in this AutoView series to come. Today's video covers position sizing. The next video will cover automating one of my personal profitable scripts with everything we've learned so far. And then the video after that is going to cover inconsistency mitigation. Basically, that will cover time filters so that your script doesn't trade during certain times of day when the spread might be a bit too wild. We're going to cover GTDs for limit orders, so good till date and good till time, so time limited limit orders that have an expiry. That can mitigate risk when it comes to auto trading. And we're also going to cover how to use multiple AutoView aliases or sub accounts through Oanda so that you can trade multiple strategies across multiple accounts on your broker. And then the final video, we will cover how to set up a virtual server to run AutoView 24/7, because you do need to leave this plugin running 24/7 in your browser in order for it to auto trade and detect the TradingView alerts, which is a big limitation of AutoView if you can't leave your computer running at all times. But I'll show you a way that you can easily set this up on a virtual server to run 24/7 in the background while you're at work, while you're at school, while you're sitting by the pool drinking cocktails. Whatever your lifestyle is, we can have an AutoView script running in the background, or multiple scripts running in the background, no matter what you're doing, how busy you are. Now, it's not as easy as simply just setting up a few parameters and clicking the go button. There is a lot involved in profitable auto trading, but the video series should give you a very comprehensive introduction to how this all works. Now, last year I recorded a YouTube video on how to calculate your position size in PineScript. None of that information has changed, so I'm going to replay part of that video from last year explaining the source code to this position size calculator. Then we're going to come back and apply this source code to a practical example so that you can go and play around with this stuff in your own scripts. All right, so in this lesson, I'm going to show you how I created my position size calculator script down here. So if I open up the settings menu here, you can see I can input my account balance, my account currency, the risk per trade is a percentage of my account balance that I want to risk, and my stop loss size in pips. And then this script will calculate my position size, which is this number here in red. The number here in orange is the exchange rate between my account currency and the market that I'm currently trading. So right now my account currency is set to US dollars, and I'm on the US dollar versus the Swiss franc. And so the exchange rate that I'm seeing here is this current rate right now. But later in the video, I'll show you examples of using different account currencies on different markets, and we'll break down how the script works. So let's quickly just go over some theory relating to position size calculations in Forex trading. So here I am over at babypips.com, and they have a good article here explaining the different nuances between calculating your position size based on certain parameters. So a good example of this is you want to buy euro pound and your account is denominated in US dollars. This is where it gets tricky, because now if you're going to calculate your risk as a dollar amount or even a percentage amount, doesn't matter, you need to calculate that risk in US dollars while taking into consideration the exchange rate between the US dollar and the pound and the euro and the pound. Now, obviously, if you're trading a currency pair using the same currency as the quoted pair, so say you're trading US dollar against the Swiss franc and your account is denominated in US dollars, then the math behind calculating your position size is a lot simpler. But the problem I was having is that a lot of my currency pairs in my portfolio do not contain my account Australian dollar denomination, and so I had to come up with a clever way to calculate that risk accurately.
And so what my script is doing is it's following this step-by-step formula. The first thing it does is we tell it a percentage risk amount that we want to risk, and we tell it our account balance. And then the script will determine what that percentage value of our account balance is in the currency that our account is in. So in my case, if it's an Australian dollar and I want to risk 1% of $1,000 Australian dollar account, then this number would be $10. $10 is 1% of a $1,000 Australian dollar account. But then I need to convert that risk amount. So in this case, it's 50 US dollar. In my case, in my example, it'd be 10 Australian dollars. We need to convert that risk amount into British pounds. So we convert our risk amount into pounds, British pounds, and then we get our risk amount in the quote currency. Then the next thing we need to do is divide that amount by how many pips our stop loss is, and that will give us our value per pip. So every pip that this currency pair moves will be worth 0.14 pounds in this particular example. And then we use that information to calculate our position size. And so let me go over back to the PineScript editor and I'll show you exactly how my script works. So let me hide the script for now, since we're not focused on that. We're focused on this one down here, the position size calculator. Let me open up the source code to it, and the source code will be below this video if you want to follow along with me. But here it is. And so what we're doing here is, first of all, we're getting our account balance from the settings menu. Let me pull this down a little bit. From the settings menu. So we're getting our account balance. We're getting our account currency. We're getting our risk per trade as a percentage. And we're getting our stop loss size in pips as a whole number. The next thing we need to do is check if our account currency is the same as the base or the quote currency, which is used for converting our risk amount if needed. So if the account currency is the same as the counter currency, then this will return true. So we're checking our account currency variable, which is just a string variable. And here's a list of options to choose from, all the major pairs. If that account currency is the same as whatever currency we have loaded onto our chart, which is what siminfo.currency will give us. As you can see here, the currency for the current symbol returns a currency code, USD, EUR, etc. If our account currency is the same as the currency we have loaded onto our chart, this currency here is our counter currency. So we're checking, is our account currency the same as the counter currency? And then this Boolean down here is checking if our account currency is the same as the base currency, which is this guy on the left. And then we use these Booleans later if we need to in order to convert our risk. Once we determine these two Boolean values, we can use them to determine whether our account is in neither of these. So if I set my account balance to Australian dollars, then this would return true. So if I do that now, come up here and set this to AUD, that changes how our position size is calculated. But moving on, the next couple of variables we're getting here is the currency conversion rates. So first we need to get what currency pair we are converting our risk amount into, if applicable. So in this case, I've set my account balance to AUD. So this block of code in here will be getting executed since my account currency requires conversion in order to get the appropriate risk amount. So we're checking first, is our account currency the same as the counter currency? And if it is, then we just want to set our conversion currency pair to this pair here, the pair that we're currently on. Because the next thing we're going to check is our account currency neither the counter currency or the base currency? And if this is true, then our conversion currency pair is going to be set to whatever we've set our account currency to. So in this case, it would be AUD as a string plus siminfo.currency, which is this guy here. So if our account currency is not in the currency pair that we're trading, then our conversion currency pair is going to be set to our account currency versus the counter currency value. And then we use that on the next line to get the conversion rate, the currency rate between our account currency and the counter currency. I hope you're following along. Sorry, I know I'm saying the word currency a lot, starting to sound funny to me as well. It is a bit confusing, but if you play around with this code, I'm sure it'll make sense to you. And then finally, if neither of these are true, then it will just set the conversion currency pair to the same thing as this. So actually looking at this code, I could optimize this further by removing this second conditional statement here, which I'll show you what I mean right now. So because this second conditional statement, no matter what this is, will return the same thing, I can just remove this conditional statement here and save the script, and it shouldn't change anything. So there we go. And so now we're just checking, is the account currency the same as our counter currency? If it is, then we reference this ticker that we're currently loaded on. Otherwise, we combine our account currency, in this example AUD, with the counter currency. So we would have AUD versus the Swiss franc, and that would give us our current currency conversion pair, and therefore the currency conversion rate. So let me set my account back to AUD for this example, and let's move on to the next line, which is this one here, where we're using the security function to pass it our symbol, which is our conversion currency pair, which is determined by this line above it that we just went over. We're using the daily resolution to get that currency value, and we're just referencing the closing price of whatever our conversion currency pair is. Once we have this information, we know our account balance, our account currency, and we know whether or not it's included in the symbol we're trading, and we have our risk percentage and our stop loss size in pips. Then we can use all of that information to calculate our position size, which is what this custom function here does. And so let me just run you quickly through this function here. So I'm just creating a new custom function called get position size, and it only has one input parameter, which is the stop loss size in points, not pips, but points. So if I'm using a 10 pip stop loss, as I do in this example, then we need to convert this number into 100, because 10 pips in a Forex market is 100 points. And our stop loss is being calculated using points in this function. So that's why when I'm drawing this data, I convert our stop loss size from pips to points by just multiplying it, whatever value this is, by 10. But anyway, the custom function here, first it determines our risk amount. So it multiplies our account balance. So in this example, 1,000 Australian dollars by our risk per trade as a percentage. So this little block of code here, this risk per trade divided by 100 is converting our 1% whole risk into 0.01, because 0.01 is 1% in mathematical terms. But I have my risk per trade as a whole number in the settings menu because it makes more sense. It's more intuitive to users of the script. So I could change this to 0.01 and remove this divide by 100 bit of code. But then it's a little bit less intuitive for traders who are using the script. So that's why I did that. Same with the stop loss pips. We could have had this in points and just change that to 100. But again, it's counterintuitive because most traders would operate using pips and not points. So anyway, moving on. Once we have our risk amount in our account currency, so in this case, 1% of 1,000 AUD is 10 AUD, then we're multiplying that 10 AUD that this code here calculated by our currency conversion rate, which we got up here. So if our account is the same as the base currency, or it's neither currency, then it will multiply our risk amount, so in this case 10 AUD, by our conversion rate. Otherwise, if our account currency is the same as the counter currency, then it just multiplies it by 1 and doesn't the risk amount. Because if we're calculating our account balance risk amount against the same counter currency pair as our account balance, then we don't need to perform any conversion at all. So I hope that makes sense. We only need to convert our risk amount if our account currency is not in the currency pair we're trading. So next up, we calculate our risk per point. So we're multiplying our stop loss size in points by the point symbol point value. siminfo.point_value will give us the value of a point on this market. We're multiplying that by our stop loss size. And once we have all this information, our risk amount and our risk per point, we can use that info to calculate our position size in units. And to do that, we just divide our risk amount, which takes into account our conversion if necessary or if applicable. And then we're dividing that by our risk per point, and then dividing whatever that is by this siminfo.minimum tick value. And that will give us our position size in whole numbers. And then finally, we just output. Remember, the last line of code in a custom function is the output expression. And in this case, we're just outputting the position size value we just calculated, but we're rounding it before we return it because we don't want any decimal places after it, since you can't trade a fraction of a unit, at least not through Oanda, which is the only Forex broker that AutoView works with at the moment. And then finally, once we're done there, we're just drawing that data to the chart. Very simple. That's the simplest part of this entire script. And all we're doing is we're plotting our position size using the get position size function that we just went over. We're passing it our stop loss size from pips to points, which simply multiplies our stop loss size from here in the settings by 10 to get our stop loss in points. And then just for debug purposes, when I was working on the script, I also wanted to plot our conversion currency rate. So let me go over this in practical terms right now so it makes a little more sense. So in this particular example, we are on US Swiss, so US dollar against the Swiss franc. My account balance is in AUD, Australian dollars, and I have $1,000 in there. And down here, what we're getting is our position size. And I've got to come back up here and change this back to 1% because it should be more than 66 units. There we go. 66,000 units. So if I hover my mouse here on this current candle, you can see that this orange number, remember our account balance is in Australian dollars, which is not in the market currency pair that we're trading. And so we need to convert our risk amount into the quote currency, the counter currency, in this case Swiss franc. And so this orange number down here is showing the conversion rate between AUD and Swiss franc. So it says here 65669. If we go over to AUD Swiss franc and I load that on my charts, you can see here 65688. That's the conversion rate. Let's go back to US dollar Swiss franc and let's open up the trade window and confirm that our position size is correct. So we want a 10 pip stop loss. We want to risk 1% of our account, which is 10 Australian dollars. We need to convert that risk into Swiss franc, and let's confirm that this is working. So over here, I'll set a buy order for a 10 pip stop loss, and I want to risk 1% of my account, and my account balance on this account is $9,832.84. So if I come up here and I change this to 9,832.84, click OK. Now you can see that our units that TradingView is telling us to trade in order to get 1% of our account balance is very, very close to what our script is calculating. So I'm not sure why it's not 100% accurate, but we're only, 17 points off, 17 units off this value. So that's close enough for me. And so the script is working. And just to prove it, let me change my account to an account in US dollars now. So this account is $9,975.01 US dollars. So let's type that into here, 9975.01. Change this to USD. Click OK. Now open up a new order, 10 pip stop loss, 1% risk. That gives us 91,788 units. And that's pretty close to what our script is calculating, 91,779 units. So this one's only about 10 units off. Very, very, very close, very accurate. It's as accurate as we're going to get with this script. So our position size calculator is working. This script is working. That's great. So now let me show you how I use this in practice, in a practical manner.
All right, so now we're back with the script I showed you at the beginning of the video. I have copy and pasted everything from the section of the lesson you just watched. So we have our user inputs here, just the account balance, account currency, risk per trade. Let me comment this to get user input to be consistent. So the only difference here between this code and the code from last year's video is I added this section down here at position size. So this position size calculation code is intended to only work for the Forex markets. So if the current market is not a Forex market, then we set our position size to 0. This is just a safety mechanism to stop this script from trading on any market other than Forex. So if you try to trade this on the stock market or something like that, your position size will always be 0. This is just to stop people who don't know what they're doing from accidentally blowing an account by using this code on the wrong market. In theory, you should be able to calculate your position size for any market, crypto, stocks, commodities, you name it. But the techniques you use will be different, and maybe I'll cover that in a different video because I don't want this video to be too long. But for today, we're sticking with Forex. We have our position size calculation code. You can literally copy all of this code here, paste it into your own scripts, and you are ready to go. All you need to do is calculate your stop loss price, work out the distance from your entry to your stop loss price, and then use this get position size function to calculate your position size, which is what I'm about to show you how to do now. So the first thing we need to do is detect a setup. And as I said at the beginning of this video, we're not detecting an actual profitable setup here because that just adds an extra layer of complexity to this lesson. We're just going to detect simple, long only bullish engulfing candles. And then we're going to base our stop loss based on the low of that entry candle. And we're going to calculate our position size and confirm that that's all working properly. The purpose of this is to demonstrate the theory. And in the next lesson, I'll show you how to use this on a practical, actual profitable strategy script. But first we need to wrap our heads around how this works in theory. So the first thing we're going to do here is detect our setup. And I need a bunch of variables here. We need about 6 variables here that are all VAR variables, so they're persistent variables. The first one is, are we in a long trade? That's going to be set to false by default. The next one is our desired risk reward ratio. That's going to be set to 1:1 by default. And of course you could turn this into a user setting, but we're not going to do that today because it's not important for today's lesson. The next thing we need to save is our trade stop price. That's going to be set to 0.0 by default. And then we need to save our trade stop distance, which will also be set to 0.0. Then we need our trade target price, which will also be initialized as 0.0. And then we need our trade position size, which will be set to 0 by default. So the next thing we need to do is detect our actual setup. That's pretty easy. We're just going to create a new variable called long setup, and this is not a VAR variable because we want this to be recalculated on every new bar on our chart. And this is just going to be a basic engulfing candle, but the first thing we want to check is the current low the lowest low over the past 15 bars, and then we check if it's an engulfing candle. So, and the current closing price is greater than or equal to the previous opening price, and the previous bar closed lower than it opened, so it's a bearish bar. And the current bar's open is greater than or equal to the previous bar's low. So this will prevent the script from detecting gap candles as engulfing candles. Next up, we calculate our stops and targets. This is the important part of the lesson. So we're calculating our stops and targets. If we have a long setup and we are not already involved in a long trade, Then we want to calculate our stop loss, our target, our position size, and save that information to draw to the chart until our target or our stop loss is hit. So first of all, we need to set our trade stop to the current bar's low minus the ATR. So this will give us our stop loss price. Next up, we need to calculate the stop loss distance in pips. So that will be our entry price, the current bar's closing price, minus the trade stop price. So this gives us our stop distance in pips. The next thing to do is determine our trade target price, which will be the entry price, the closing price, plus our trade stop distance multiplied by our risk reward, which by default is just going to be 1-to-1. You could turn this into a user input if you want to, like I said earlier. Finally, let's calculate our trade position size. So this is going to be set to get position size, and then we need to pass our trade stop distance as a whole number. So convert trade stop distance into a whole number and then multiply it by 10 to convert that distance from pips to points, because our code uses points to calculate our risk amount, not pips. So far so good. The final thing we need to do is set in long trade to true, because we are now involved in a long trade. We've detected a long setup and we weren't already in a long trade, so now we set long trade to true. The next thing we need to do is exit trade when appropriate. So the first check will be if we are involved in a long trade and the current bar's high is greater than or equal to our trade target, then we set in long trade to false and we start looking for a new signal. And we could put this in brackets and check or the current bar is lower than or equal to our trade stop. So if our trade target is hit by the high of the current bar or our trade stop is hit by the low of the current bar, then we exit our long position and start looking for a new one. So if I save the script, that should compile without any errors if I haven't made any typos. There we go. But I did forget to use the assign operator in this if statement. So let's add a colon there. Otherwise, we're just creating a new variable called trade stop distance within the scope of this if statement. And that is not what I want to do. I want to reassign trade stop distance to this value. Save the script. That should compile now without any problems. Next up, let's draw our setup info to the chart. And for that, I'm going to use a plot shape to identify which candle is our entry candle. I'm only going to plot the shape if long setup is true. And we're going to set the color to color.green. I'll give it a style of shape.triangle up and a location of location.below bar. And I'll title it long setup because why not? Let's save the script, and now we should be detecting our entry candles as signified by our green arrows, up arrows. Next up, let's plot our stops and targets. So plot, and then we need to check, are we involved in a long trade currently? If so, let's plot our trade stop, otherwise plot nothing, and then set the color to red since it's a stop loss. Set the style to plot.style underscore line break so that the line breaks between setups. Otherwise, we get these weird connecting lines. So the stop loss would draw here, gets hit by this bar here, and then the line will connect to the next stop loss. We don't want this connection thing. We just want the line to break and then start a new line. So we use the style line break plot style to achieve that. And finally, let's title this trade stop. And I can copy this line of code, paste it in there, change this to trade target, change the color to green, and the title to target. Now if I save the script, this should compile, and now we're drawing our stops and targets until they are hit. Now I'm guessing that this setup here is not drawing the stops and targets because it happens to be the bar that stopped us out. I'm not going to fix that in today's lesson because it's not important. We're still detecting this setup here. And so we're pretty much done now. The final thing to do is plot our trade position size to the chart and confirm that it's accurate in the order box. So let's add that section of code here. Draw position size. We use the plot function again. If we are involved in a long trade, then let's plot our trade stop distance in pips. Otherwise, plot nothing. We'll set the color to color.gray We'll set transparency to 100% because we don't want this actually drawing onto the chart. We just want to have the number drawing in our indicator values. We'll set the title to trade stop distance. I'll copy this line of code and change this to trade size. This is our position size. Change the color to purple and change this to just say position size. So that should be all we need. If I save the script now, we should be drawing our stops, our targets, our trade, stop size in pips, and our position size. So now let's find a market that is currently involved in a trade. Here's one. So on pound yen, we are currently still involved in this setup, this pretend setup. Remember, we're not actually trading this data. We're just using it to confirm our script is working. If we come up here and look at these two values here, the gray number is our stop loss size in pips. So 2.251 is 225 pips, and our purple number is our position size. So let's open up this order panel here and plug in a 225.1 pip stop loss. Let's risk 1% per trade. And you can see that our units here say 4,849, and our purple number is very close to that, 4,831. So we are within 0.004% accurate, which is as accurate as we're going to get with this script. So that's a successful test. Let's check a different time frame on a different market. First of all, we are currently involved in a trade here. 90 pip stop loss, 12,000 units roughly. So let's put in 90 with 1% risk. 12,128 units. Up here it says 12,130. So within 2 units of accuracy there. Let's check a few more markets to make sure everything is working. Here's another one on Euro Aussie, 49.3 pips, 1% risk is 26,050 units, 26,039. Let's try increasing our risk. Let's try 2.8% risk, just as a weird number to see if this matches. Change this to 2.8% risk. We have 72,940 units, 72,910 units. So I think that's a successful test. The script is working as desired. And that about concludes today's lesson on how to calculate your Forex position size based on the distance from your entry to your stop loss. In the next lesson, I'll be giving you the source code to a script I wrote recently that I've been using to auto trade the Forex markets on the daily chart. So it's quite a simple script, but it is profitable. Doesn't take many trades per month, but it is fully automated through AutoView to work with Oanda. But before I wrap up this lesson, let's open the source code to my ultimate pullback indicator, and I will show you how I use this code in a premium script of mine. This is a private script that I've spent years working on, and I also use this script to automatically trade the Forex markets through Oanda using this position size code. So if I scroll down to the bottom of our user settings here, you can see all of my auto view settings. So we have account balance, currency, risk per trade, and a bunch of other options here, such as how to use limit orders, days to leave limit orders, minutes to leave limit order, whether we want to use Oanda demo or an AutoView sub-account alias. Let's scroll down to the position size portion of my code. Here it is, determine position size. So here I've basically copy and pasted the block of code from today's lesson into my script. And I've also got a little bit of code here on how to set up my GTD or good till day orders, which we'll go over in one of the videos to come as well. But if I scroll down to where my entries happen, here's where we detect a valid long entry or short entry. And here is my auto view alert. So you can see here that this alert contains all of my auto view syntax commands. And here I have Q equals, which is our quantity parameter, our position size parameter. And this is set to trade position size. So we convert our trade position size to a string so that we can send this message, this string message to AutoView. But I'm passing Q equals trade position size, and trade position size is right here on line 397. And this simply calls the get position size function, just like we did in today's lesson. And this is how I'm able to automatically calculate my position size when I'm auto trading through AutoView using any script that I've ever written that happens to be profitable. So that's it for today's lesson. I hope you found this interesting. And last but not least, I recently published the Art of Trading podcast, which is a podcast I'm going to be working on over the years to come. It's already available on Spotify, but it's taking a little bit of time to get published on Google Podcasts and the Apple Store. But on this podcast, I'm going to be covering a lot of trading psychology subjects and just general trading techniques to get the best results out of your trading. That's it for today's video. Thank you very much for watching. Best of luck with your trading. Take care, everybody.